Good evening, ladies and gentlemen. Welcome to yet another virtual investor briefing. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Today we'll be talking about DOLLA Financial Services Limited and their Q1 results, which just came out. Joining us is Group CFO, Chief Financial Officer, Trevane McKenzie. Welcome, Trevane.
Thank you.
And also Group CEO, Kenroy Carr. Glad to have you guys back. Welcome, Kenroy.
Thanks, Dan.
Great. So we're here to talk about the Q1 results, and I want to remind you guys, if you're a fan of the content, to subscribe to stay updated with our uploads. Be sure to hit the bell to receive all notifications because we publish videos like this just about once a week, two this week, as a matter of fact. If you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today to get started. Okay, without further ado, let's dive into these results. So we're talking about the Q1 results for DOLLA, which is March 31st, 2024, and they were stellar. Before I get into that, just want to give you a little bit of history because these are the new kids on the block, and I don't mean Trevane and Kenroy specifically. I mean DOLLA Financial Services. Just want to get you up to speed. Remember, they came to the market approximately 2 years ago, June 2022, at $1, when their total assets were worth about $861 million, total equity was $315 million, and their profit for the financial year ended 2021 was $168 million for the entire year. Does that sound about right? Can I?
That's right.
Here we are now in Q1, and spoiler alert, for the first quarter alone, the profit is $152 million before tax. Let's dive into it a little bit to tell you about the details of it. So net interest income was up to $304 million, an increase of 22%. Operating expenses also increased by approximately 22%, up to $147.6 million. Net, we end up with a 24% growth in the PBT to $152.3 million. A little bit of taxes there associated presumably with companies that aren't on the junior market, subsidiaries. I presume Ultra, maybe the Guyanese company, $12 million of taxes, and that gives us a net profit after tax of $140 million for the quarter. So $168 million for the full year in 2021. When they did the IPO at $1, gave up 20% of the company, raised $500 million. That means the total valuation just 2 years ago was $2.5 billion. And here we are in the first quarter alone, delivering $140 million of value, trailing earnings of $438 million, stock price of $2.76, which returns a PE. Total market cap now up to $6.9 billion. So in 2 years, we've gone from a valuation of $2.5 billion to a valuation of $6.9 billion. If you bought the stock at $1, you'd be up 176%. It's now at $2.76. And the growth rate in the business is phenomenal, 24% growth in profitability year over year. But more importantly, again, within 2 years, they're making in a quarter pretty much what they made in the year before they came public. So, kudos to the team for this impressive growth. Total assets up 26% year over year to $3.2 billion. Again, remember, total assets under $1 billion 2 years ago. So in 2 years, again, this delivered phenomenal growth in the business. What I like about that growth with the total assets now up to $3.1 billion and their loan book up to $2.8 billion is they've grown their loan book from $800 million to $2.8 billion in 2 years and still kept the NPLs in single digits on non-performing loans. We'll talk a little bit about that. That's up to 8.5% coming from about 5% 2 years ago. But with that phenomenal growth in the book, that's to be expected. But the expected credit losses impressively have reduced from 5% 2 years ago to 3.5%. So they're managing to, and we'll talk a little bit about that, to really keep down the expected credit losses or the ECLs. So that's very impressive. Total debt also up to $2.1 billion. So this is a business that raises funds from the market, on-lends it, makes a healthy net interest margin of about 80% by my math, net profit margin of 42%, and efficiency ratio of 41%, all fairly similar to where they were 2 years ago. So again, it's impressive that they've grown the loan book from $800 million to $2.8 billion, kept ECLs and NPLs reasonably low, certainly by market standards, and maintained net profit margin, profitability margins, and efficiency ratios intact to where they were when they were much smaller. Indeed, the efficiency ratio this quarter at 41% has reduced from same period last year. It was 45%. So we've actually seen some improvement in the efficiency ratio in the last year. So all in all, I think the results are spectacular. Jumping to the next slide, you can see it for yourself graphically. This is the 6th quarter in a row where they've exceeded $100 million profit per quarter, now getting up to $140 million, highest profit in a single quarter ever, with the $2.8 billion loan book, over $200 million in cash and near cash at the time. Of course, we did pay a dividend of $100 million on April 5th, so we started to see the business paying healthy levels of dividends. I presume you've used up some of that cash. But all in all, we're very satisfied with the growth of the business. 2 more highlights since the IPO. They did raise roughly $1.2 billion from VNBS subsequent to listing, which has helped to grow the loan book. And then they also entered into a sort of partnership arrangement with Mayberry, and we're now responsible for helping them to take that loan book to the next level. With that also significant event, we saw small changing of the guards. Now, Ken Roy was Chief Operating Officer when he went public. He's now Group CEO. Trevane was CFO at the time. She's now Group CFO. So it's good to see continued some succession planning and growth. And on the shareholder side, I want to declare a small conflict. Mayberry and Friends took up a 35% stake at DOLLA about a year ago. So all in all, those are the big events that have happened since they've gone public. Tremendous growth in the balance sheet and in the profitability, and I'm very impressed. So easy one thing, Ken Roy. How did you guys do that? Great quarter. How are you going to keep doing this? Can we continue to see this type of growth going forward?
Most definitely, Dan. I mean, you have summed up in a really great way the performance of the company since we went public since 2022. And for Q1, for sure, you'd have seen that all of the key performance indicators that we track on a daily, weekly, monthly basis would have outperformed those. So the team that we have on board is very committed. It's a team that's fully engaged, and an engaged team will give you the results that you want. So with prudent lending practices, with ensuring that the loan portfolio quality is robust, we will continue to produce spectacular results on a quarterly basis.
And we continue to look forward to that. And folks, each quarter as we go forward, expect to see those results announced here at Mayberry on our program. Trevane, how do you do it? NPLs and ECLs in particular, how are you guys able to keep them, really low, best in practice, certainly for microfinance lending?
Well, Dan, we've been speaking about the NPL and ECL for some time now. Particularly with the ECL, what we have been doing is ensuring that our secured loan portfolio is where it should be. We ensure that the quality of the loan portfolio is as best as it can be through our credit department. And of course, it starts with sales. With the NPLs, though, it's really a collections effort. They understand what they need to do. They push, and we also ensure that we maintain the relationships with our customers from day one, so they understand that repaying on time is crucial for us and for them. So it's a collective effort between all the teams and our customers as well.
Right, and so you've grown the loan book to $2.8 billion. How are you doing with the secured side of the loan book as opposed to unsecured?
I believe at this time we have about 83% secured, with the balance being unsecured. And we're really proud of this because it really helps us, as I said before, with the NPLs. Very important for us to ensure that we maintain that kind of credibility.
Absolutely. So you're not just growing for the sake of growing, you're maintaining the quality of your loan book, and in particular security and the type of security that you secure as well too. And so what specifically would you say enabled this substantial growth year over year in your loan book?
It's purely sales, Dan. You can see it when we borrow, most of that, if not all, goes back into the loan portfolio. So it's definitely the sales team. They have been doing an excellent job, and really and truly, we've been talking about it all this time. It's purely sales.
Yeah, elaborate a little bit about that, and let's talk about Ultra, because that is also new since the IPO. What's Ultra? How is that a part of the strategy?
Ultra is an excellent part of the strategy because it focuses solely on collateralized loans. And that's a big thing for us now, especially because lots of persons out there, they need short-term financing and they're able to come and get that quickly. And that's how we also make good business, especially over the commercial banks, because we are able to facilitate that in a short space of time. And really and truly also networking helps us with that, because there is a big network of those persons, especially here in Kingston, in Montego Bay, that really appreciate that type of lending, that type of, security, and ensuring that their business is confidential and they can get things done quickly.
So you have different markets that you're targeting with your main dollar business versus ultra financing.
Yes, and we definitely have to do that because of the BOG as well. Right. So I believe we spoke about this too. DOLLA is not able to lend to high net worth individuals, but Ultra can.
Right.
So the target market is extremely different, and we keep it that way.
Good part of the strategy. And how big is Ultra in the scheme of things? Loan book or revenues?
Ultra is now at $1 billion, Dan.
Excellent, and growing.
And growing.
And growing. Well, my job is to make sure I get you at least $1 billion of funding over the next 6 months so that you can keep growing this business, because it really is impressive. Does the company have any plans to continue expanding in terms of locations across the island?
So sure. As we grow down, and as the business gets stronger, we have been looking at the market in general, looking at the statistics, doing some market research, and seeing where we can in fact expand it to increase the growth in the business. And we have seen an opportunity with a new highway, with the build out in St. Thomas, the building of a new town center, and just the demand that is coming from that area. And we have in fact decided that we will be setting up a physical location in Morant Bay, St. Thomas. We have gotten the green light to go ahead and do that, because with the new Microcredit Act, we have to get a no objection from the BOJ, which we have. We have secured a location, and we're working on getting that opened during the second quarter.
All right, so coming soon. And while you're opening one, you may be closing another. Let's talk a little bit about Guyana.
Okay, so Guyana has been in operation since August 2021, and for the time that they've operated, we have been profitable. The company has grown tremendously. However, we thought it prudent that due to some of the things happening in Guyana, the geopolitical tension that's there, and just the potential that it has on the market in general, the macroeconomic variables, that it's prudent for us to pull out of that market. We have been doing it strategically. That would have been announced about a month ago on the Jamaica Stock Exchange, so the market is well aware, and we're prudently managing that exit through Guyana. We are expected to collect all of the funds that we have there on a phased basis. I think the portfolio overall will, we should be able to collect all monies owed in Guyana by March 2025, and we are just strategically managing that so that it doesn't have an impact on the consolidated group numbers.
The size of that loan book there, less than 10%, less than 5% of the total portfolio?
It represents approximately 5% of the total.
Okay, so it's relatively small.
Right, relatively small.
And your growth strategy, if you want to grow this debt book by $1 billion or $2 billion over the next year or two, you're saying you can achieve that within the Jamaica framework?
We can in fact, and that too is one of the decisions that guide us in terms of moving out of Ghana too, because we've seen where the demand is more. Based on the demand that we have in Jamaica, we are able to now divert those funds to create a better return for our shareholders. And lending $1 billion, $2 billion based on what we are currently doing in Jamaica, that is more than feasible over the next 9 months.
Can you elaborate on the loan portfolio composition?
Sure. So the portfolio is largely made up of business loan, and that is one of the key strategies for us that kind of gives us a competitive edge. When you look at the results, that's one of the key area of focus relative to other partners in the industry. So DOLLA's portfolio is comprised of approximately 83% business loans. So these are loans to registered businesses, entrepreneurs, and just small and micro businesses. And in doing this, you find that having maintained this strategy, I believe that we see where we focus on small businesses, we're able to take them to the next level. And because of the appreciation for what we do on a daily basis with these businesses, they find that we have a lot of repeat customers. So these customers are customers that we have been building since inception, since 2021, since 2022 when we went public. And we have seen where as these businesses grow, the return comes to DOLLA in increased business from these same customers.
Excellent. And in terms of overall macroeconomic environment, how do you feel about the next, 6 months, 9 months, 12 months in relation to, we're expecting interest rates to start coming down, certainly over the next 6 to 9 months. Economy seems to be doing very well. Tell me, what does this mean for Dollar Financials and your own growth strategy and improving profitability?
Well, of course, we have to look at the macroeconomic environment. That is one of the things that guides us and kind of allows us to make adjustment to our credit policies, for example, to ensure that the quality of the portfolio is as robust as possible. I mean, we expect interest rates to come down, and that will be a good thing for us because in raising funds, then we can reduce that interest expense, which ultimately adds more value for our shareholders because it hits the bottom line directly. And with the improvement in the economy and how strong it is, then we do anticipate that persons will be in a better position to honor their obligations with us once they take a loan. And that we're anticipating that over the next 9 months or by the end of this year, we will continue to see improvement in the economy, and that really augurs well for our business.
Great, thanks for that. Well, folks, I'm not going to drag it out. There's no secret that I'm in love with Dollar Financial Services Limited. The results speak for themselves. I want you to keep watching this stock over the next 2-3 quarters. I think at $2.76, despite the 15.74 PE, it's a giveaway because of the growth. Again, they've grown their loan book by over 170% in the last 2 years, and there's nothing to stop them from repeating that feat over the upcoming 2 years. Now they've got partners like Mayberry on board to help improve their access to loan funding. We expect interest rates in general to be coming down over the next 6-9 months. We think that the markets of unbanked or underbanked or underserved is still vast, and the opportunity for them to continue growing in the microfinance, microcredit finance space is still substantial. So I think if you're looking for this industry, a stock to invest in, this is certainly best in class of your options on the Jamaica Stock Exchange. It's a great business. I loved it at $1. I loved it at $2. I'm still in love with it at $2.76. And I look forward to having you guys back in the upcoming quarters to see you continuing to do well. So the bar's being set, guys. It's $150 million a quarter PBT. It has to get better. All right, well, that's it. Thanks for tuning into the program today. And that's it. That brings these discussions to an end. I'd like to thank our viewers, as usual, for tuning in. Your support is always appreciated. Big thanks to Trevine and Kenroy for stopping by today to be a part of the show. Thanks, guys. Appreciate it.
Our pleasure. No problem.
To our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our social media pages, and we're excited about the upcoming financial releases in the pipeline, so stay tuned. As usual, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. And remember, wise investors, slow and steady wins the race. Keep safe, guys. Goodbye.